appeal, ICAI representation and other litigation and advisory. At his career, he has gained hands-on expertise over a decade with a renowned CA firm followed by his own practice. And he has closely associated with advising legal, shipping and logistic companies and integrating with their foreign counterparts. So today we have someone who is having knowledge of DT, IBT as well as international taxation. So thank you for accepting the invitation. I request Avarshna to present the memento towards love and respect. I request Pratik to present the contribution towards CAPF on behalf of SOC. So I request to start with the presentation. Thank you.
Very good evening. Very good evening. I am member of this study circle since past several years, and first time I am on this side, so it is very difficult task for me because that side is very easy as compared to this side. But I will try my level best. Another thing is I am thankful to BCSC Study Circle for providing me this opportunity for speaking on this topic. This topic is normally not considered as important by chartered accountants, and rightly so, because nobody is interested in that. I find it from two angles, because our CA syllabus and CA final examination covers this topic, foreign trade policy. Earlier it was 10 marks, now it has come down to 5 marks. So ICAI final students also think try to break the head against this customs, FTP, all these nonsense things, ignore these 5 marks. After qualifying as a chartered accountant, again we have a lot of fields, auditing, taxation, GST, whatnot, lot of notices, litigation. Why to go for this FTP? So only mad person will follow all those things, and I am such mad person who followed for last 15 years. So little bit experience I have in this field, which I would like to share with you. I may go wrong somewhere, so you may correct me also. My background, I will not take much time because I am not that great to talk about me. I qualified in 1991, which was the liberalization year, which everybody of us, from that fraternity, they may be knowing. So that is called year of liberalization, economic liberalization. So I thought ICAI also got liberalization policy, and I got qualified in that. So now let's move on the topic proper. So this is a foreign trade policy everybody is aware of. So I will not be going much into the theory part, etc., because that everybody can go in DGFT side and see that. Now foreign trade, that is international trade, everybody knows. So foreign trade policy, what is new in that? So I would like to make it interactive, because then I will also learn a few things. Now what is big in that foreign trade policy? Like union budget, every year we have budget, right from so many years, right from 1991 I am not missing any of the budget. And we were fortunate enough to listen to such great personality eminent lawyer that time who was analyzing the budget, and everybody no need to give the name of that person, that is Nani Palkiwala Sahib. So we used to see his analysis on the budget immediately after 2 hours. That time budget used to be presented at 3:30 p.m. in the evening, and immediately after at 6 o'clock at Baburao Stadium, not the cricket match, only speech of Nani Palkiwala Sahib. I was fortunate enough because my guru, Jayendra Sahib, where I learned my taxation, basics of taxation, he was very close associate of Nani Palkiwala Sahib. And one of my friend is also with me, who was in my firm. Okay, now let's go to the topic proper. Now, foreign trade policy, all of us know, every 5 years this policy is framed by the government. Earlier also, why it is from 1991? Any change in 1991? Before that also there was policy. So that was called exim policy. Naming change. It's not only name change. We'll see now why it is important now from the point of view of chartered accountants. We will see, because now everybody is interested. Government is also wants to promote export, and there are a lot of opportunities now coming. Before that, I understand this field is handled by non-chartered accountants, mostly by shipping agents, CHAs, freight forwarders, etc. Now we'll go to the I'll move fast on this. The presentation agenda is simple: evolution of foreign trade, then the powers and responsibilities, India state story, statistics, etc. Overview of FTP, free trade agreements, which is a very hot topic nowadays, current updates and benefits, licenses, scripts, skill development, status holders, those are all the certifications given, then additional professional opportunities, this is important, and table of notifications. Now, foreign policy evolved. As I told you, 1991 is the year of liberalization. All of us know that time the Prime Minister of P.V. Narasimha Rao and late Finance Minister Dr. Manmohan Singh was iconic in this movement. And in that year, what happened? There was no sufficient foreign exchange reserves. Now, how much approximately reserves we have today? About $700 billion. That time, the reserves position was only 15 days, which can cater to the 15 days of the country's position. So that's why the economy is opened up, and all this technology, etc., has got into it. Now, what is changed in 2015? I don't say government change, that is different. What is changed as a policy? So the government now is focusing on Make in India. So Make in India and export. And what is changed in 2023, 2023? Digital, e-commerce, and such. Of course, the digitalization is need of the hour, so that is done. Okay. Now, who handles foreign trade policy? Now the thing is, there are two ministries. One is Ministry of Finance. So Ministry of Finance, our income tax, GST, and custom duty also comes. So everything, all money matters goes to Madam. So what about Ministry of Commerce? They have to only frame the rules and regulations and control the policy. Export and import policy means the foreign trade policy. So this comes, the power comes from the FTDR Act. FTDR is a foreign tax. FTDR Act, Development and Regulation Act 1992. Section 5 of that Act gives the powers to the central government to form a policy, and the Ministry of Commerce is a regulator, DGFT is a regulator, like CBDT is a regulator in income tax, CBIC is a regulator in indirect tax that we are aware of. So like that, the regulating body is a DGFT, Directorate General of Foreign Trade, which operates under Ministry of Commerce and Industry. So these are the powers which I just told you, all the acts, GST Act, Customs Act. Customs Act, then you are aware that tariffs. Tariffs means in ITC code, that it is a harmonized system code. So all the commodities are allocated in 98 chapters, HSN chapters, from animals, vegetables, machinery, this, that. So all 98 chapters covers all the commodities which are given in the Indian Customs Act for the purpose of levying the custom duty, which is popularly known as import duty in other countries. Income Tax Act, I have gone ahead for 2026 only, because it is now coming in another 2 months. Ministry of Commerce and Industry, FTDR, as I told you, 1992, DGFT, Formulates and Implements FTP, Foreign Trade Policy, to regulate imports and now see foreign trade policy. This is important. The objective. What is the objective of the government? In that act, it is written to regulate imports and encourage exports. Government do not want to encourage exports. Encourage imports. Government wants to regulate imports. But exports, government want to encourage, because then only our foreign exchange reserve will increase. Now, last few months, everywhere in the world, everybody is looking at the news from what superpower's grandfather will announce. Because superpower's grandfather, their grandfather is known there in US, one of my relatives in Bolivia. Everybody calls him as a grandfather. So nobody knows what he will do. Today he will say 25% tariff. Next day he will say 50% tariff. After a few days he will say 18% tariff. So it is uncertainty. We don't know what tariff will be tomorrow. Then now we again came, because Supreme Court has given the decision there. This tariff is wrong. He cannot levy that. Now what will happen? Already about $180 billion is collected. Collected from whom? Collected from the importers. Means US consumers have paid. So now there is a problem. Who will get that? Because this is built in the cost for the Indian exporters.
So when Supreme Court said that he cannot implement,
it is already done, no? But now he cannot implement. From this date, after Supreme Court decision.
the Supreme Court of US?
Yes, Supreme Court of US, not Supreme Court of India. Supreme Court of US. Okay, coming back to that. Now, he took out the advantage of some 1974 some act is there. He said, as per that act, President has a power to leave. So he made it now 10%, and the next day immediately he said 15%. I have a right to make 15%. So now there is 15%. From Indian point of view, it is good, because our duty was reduced to 18%. Now it will become 15%. So India is silent on that. Let's see what happens.
MFN.
Yeah.
Both favor Nathan Staten.
No. I am talking about US.
US only.
Ah.
What little understanding I have is because the MFN with the 3% deduction of then anyway.
3% deduction to?
Because the MFN, most favored nation.
Yeah, I know. Most favored nation. There are different agreements with them. No, this is a tariff. Tariff is with each country, like FTA. No, now we are discussing FTA with EU, which is finalized in respect of certain commodities. So certain commodities, import duty will be levied. Certain commodities, import duty will be levied in next year, 27, 28, like that.
What came in some paper, it will be 18.5 effectively, not 18.
What? Sorry?
If we go to the trade agreement, there would have been a 15% for us. Now because of this 15% by Supreme Court, it will be 18.5.
No, not by Supreme Court. No, sorry.
By US Supreme Court.
It is by President. Supreme Court has said whatever you have levied, you don't have power to levy that. That 25 plus 25, emergency, etc.
It would have been an agreement between both of us, 18%. Then would have been effective levy would have been 15%.
Right. And because of he has now made it 15%. So now let's see how it. So even Indian delegation wanted to visit. Now they also postponed that because there is uncertainty now. Anyway, now who are the major contributors? Now why problem is for India? Normally, layman or WhatsApp University or the television, when we see that, we always say, "Arey kya karna hai? Chhod do US ko. US ko maro bole, China ko maro bole." Very easy to say. Economically, it's not possible. You see the numbers. It's not easy. No, tomorrow, if somebody says, "No audits from tomorrow, no taxation from tomorrow," nothing. What will happen? And they will say, "You look out for another avenues." All chartered accountants should look for avenues, other avenues. No tax audits, no compliance, no ROC, no income tax, no GST. Ramdev Baba's this idea. Collect only 2% on the bank receipt. Abolish everything. Like that long back, he has given the idea, abolish all the taxes and charge 2% on all the receipts, whatever comes in back from whichever. Anyway, I'm just joking. That's not practical. But now coming back to this, you see the percentage. 51% of India, we export to about 250 countries. If you see, go in DGFT site, you will get all the trade statistics. I'm not going into that. So 240 countries, out of 240 countries, only this 10 countries, our export is 51%. And this pattern is still same. It has not changed from 2015, 18, 20 or today also if you see, pattern is same. That is the reason USA we are exporting 18%. So if this tariff would have been continued, then definitely you will get a reduction of 10%. It is not possible to export at 50% tariff. 50% tariff means it is a building cost. He has to pay 50%, so he will prefer other countries. And unfortunately, India is not at that stage. Our products are so much of quality, because I have been in Africa also. I have seen most of the machinery is going in Africa. Sometimes the standard of machine or quality of machine is good as compared to China, but delivery, time schedule, infra, tremendous capacity China is having. We cannot beat that. The global dynamics, which we say, no, with the capacity of manufacturing. If any African buyer gives the order here to Indian supplier and say, I want 10 machines, he will ask number of questions. Send me this advance. Then he will give the schedule. How many months? 1 month. But he will deliver it after 3 months or 4 months. So next time they will not give it. China, then they will give 20 machines. Huge capacity. And we cannot compare, but let's hope now, because government is taking good initiatives, no doubt about this. Now we have got good minister also, Ministry of Commerce and Industry, our own fraternity member, Piyush Goyal, and he is doing well. He is pushing the exporters. It's not easy task, but he is pushing the exporters, pushing the manufacturers. I will come to that. The new initiative where chartered accountants have a role to play, where he is making new initiatives. Okay, so this is the data that is USA, UAE, Netherlands, how much percentage. This is our export. Now, are we in trade surplus? We have surplus export, import. Imports are more or exports are more? Imports. We are in deficit, right? In mercantile or service? Mercantile we are in deficit. Services? We are. So this is the data. See, this is April to January. This now recent data, April to January 26. Exports same 36 billion, 366 billion, and imports 649. Now services you will find there 354 is exports, imports is only 173. Means we have a surplus in services but deficit in mercantile. So that is offset, and again we have trade balance shortfall. Now what is our target? Our target is $2 trillion, which is $2,000 billion by the end of 2030. We are at 2026. Let's be positive, because that should be then CAGR rate of 15 to 18%. We have to go at 15 to 18% CAGR rate, average growth rate, then only it is possible. I would say not impossible, but it's not that easy also. A lot of incentives. Another thing what is happening, I will come to that. Now incentives are going to be reduced. Incentives are gone rather. Only road tax etc. is there, that is also going. So you cannot incentivize. So exporters earlier used to get about 6 to 7% of FOB value. So some of the Indian exporters were exporting the goods even though there is no margin, because at least they will get 7 to 8% from government. If I do the export of 100 crores, I will get 6 crores at least from the government. Now that has gone. So if it has gone, then why exporter will export in such a competition? So now government is pushing the other incentives, because incentives they cannot give because of WTO rules and all. So this is a target, 1 trillion mercantile export and 1 trillion service export. That is a target of 2030. How much we have achieved so far? $825 billion we are achieving. 825 includes the services. So we are short. But let's hope in 4 years it will be improved. Now foreign trade policy, I am not going much into detail on the theory part, etc. that everybody knows. Anybody can read from DGFT website. You can download foreign trade policy, you can download HBP. Foreign trade policy and HBP, what is the difference? Handbook of procedures. Like our Income Tax Act, income tax rules. Like that. So FTP we consider as an act, HBP is a rules. Okay, it is divided into 11 chapters. 11 chapters I have not taken here because that is definition. I don't know in this why they have put definitions at the end. Normally definitions are in the first part. So government also may be thinking, nobody reads definition. Let's put on the 11 chapter. So these are all the heads, legal framework, etc., general provisions, how what is regulated and all, developing district. That we'll see. So I move further. How it is different. Now 23, one major difference, small difference. Earlier, this is good difference. Earlier policy was for 5 years. The earlier policy was 2015 to 2020. 2020 was extended because of pandemic. It was the same policy was extended up to 2023. 2023 policy, end of sunset clause, means now there is no renewal of 5 years, etc. It is continuous policy. As and when government wants, they will make the changes. So open-ended policy. So this is one major change without 5-year validity. It will be modified as and when required. Now main pillars, incentives to revision, ease of doing business, export growth via district, emerging area. This will go on lighter side, ease of doing business. This term I always little bit doubtful. What government wants to mean, ease of doing business for whom? Whether it is for the businessman, whether it is for chartered accountant, or whether it is for the government, or whether it is for the people. I still really wonder, so I made a small video on that. This is for educational purposes. This images I am giving, ease of doing. Educational purpose, ease of doing. So our madam, government, then chartered accountant in between, and the client. If you see all other acts, income tax, GST, all the other acts and compliances, tense government, unhappy CA, and frustrated client in all that. Client is frustrated because he has to sell out his money, taxation, always taxation. And in between CA, he has to satisfy government also. इसको भी कुछ रखना है, इनको भी कुछ रखना है. ये फीस दे रहा है, वो बोलेगा यू आर प्रोफेशनल, इंटीग्रिटी होना चाहिए, कोड ऑफ कंडक्ट, सब कोड ऑफ एथिक्स आपको ही करना है. हमको तो आपका पैसा लेके पब्लिक को बांटना है. तो आपको पैसा कमाना पड़ेगा. So you are agent for us, you are trustee for us. Collect the money, take the taxes, you taxes from the businessman, pay to them. So ये situation. तो फॉरेन ट्रेड पॉलिसी क्यों अच्छा है? देखो सब हंस रहे हैं वहाँ पे. पीयूष गोयल जी खुश है क्योंकि आप करोगे तो एक्सपोर्ट बढ़ेगा, देश बढ़े आगे जाएगा. पीयूष गोयल जी खुश है, चार्टर्ड अकाउंटेंट भी खुश है, वो थोड़ा बहुत काम करके उसको फीस मिल रहा है, ज़्यादा कुछ टेंशन वाला काम नहीं है. और तीसरा, क्लाइंट भी हैप्पी है क्योंकि उसको भी क्या लॉस है. वो एक्सपोर्ट करेगा तो फॉरेन एक्सचेंज मिलेगा, इंसेंटिव कुछ आपको मिलेगा. चार्टर्ड अकाउंटेंट विल एडवाइज हिम व्हाट आर द बेनिफिट्स इज हैविंग नाउ. वी विल सी व्हाट चार्टर्ड अकाउंटेंट कैन एडवाइज हिम एंड बेनिफिट. सो that's why I went into this, very simple and सब हंसते रहे. फर्स्ट वाला काम मेरे कुछ कलीग्स करते हैं, वो मैंने करता. अभी ये उसमें ये जो बेसिक रिक्वायरमेंट्स है, क्या क्या लगता है. जैसे हमारे इनकम टैक्स में पैन लगता है, जीएसटी सर्टिफिकेट लगता है, जीएसटी रजिस्ट्रेशन लगता है. यहाँ भी सिंपल है, एवरीबडी नोज. इम्पोर्ट एक्सपोर्ट कोड होना चाहिए. अभी सब इलेक्ट्रॉनिक है, ऑनलाइन यू गेट. IC is compulsory for all importers and exporters. Without IC you cannot import, without IC you cannot export. अभी simple कर दिया, one PAN, one IC means you will get your PAN number as IC only, but it doesn't mean you need not apply. You have to apply separately in DGFT. Then they will allot you as a PAN, and the certificate they will give you. But the PAN is your IC. April to June every year you have to update. Means any changes, even though there is no change, you have to update in the site. Otherwise, after June they will deactivate. DGFT will deactivate your DS. So IC. So April to June every year you have to update without any fee. But Once they deactivate from July, you have to pay nominal fees and then you can activate again. Modification updation, if it is to be done, say within 30 days, you will update address change, bank change, etc. IC exemption and इनको है थोड़ा 2-3 कंट्री ये नेपाल, भूटान, म्यांमार, इंडो म्यांमार बॉर्डर से अगर उनकी रूटिंग होती है एक्सपोर्ट इंपोर्ट तो अप टू 25,000 रुपीज ईच कंसाइनमेंट नो नीड ऑफ आईसी. चाइना में 2 रूट दिए हैं इसको कैपिंग देना चाहता सो नो नीड ऑफ आईसी फॉर ओनली फॉर दिस. देन परमानेंट आईसी गवर्नमेंट जो डिपार्टमेंट है परमानेंट आईसी अलॉट करती है दे नीड नॉट अप्लाई परमानेंट आईसी. This is not that. Now, what is a digital India? So this is EIC. You can get on everything. You can get on site now. ERCMC. RCMC registration cum membership certificate for getting the FTP benefits because there are export incentive benefits. For getting these benefits, the RCMC is required. RCMC. So you have to select any export promotion council and do that. If you do not have any specific product, then you can register with the FIO, that is Federation of Indian Exports Organization. Validity is 5 years or you can take for 1 year also. It is like our ICAI fees, no? Either you pay for 4-5 years or you pay every year. So, same. Here you pay for 1 year also, 5 years. Prerequisite and active import IC होना चाहिए for ERCMC and it is now issued by DGFT Common Digital. ECO that we will see, that is Certificate of Origin is also. Now in the trade there is one more portal now, e-Trade Connect portal. So Trade Connect is linked with the DGFT portal. So in Trade Connect portal you get all the information and you can generate your certificate of origin from. FTA, very hot topic nowadays. So FTA, 18 FTAs. So FTA, all of us who are chartered accountants, so we understand the concept. It is a duty, tariff line. Tariff paid in that country, tariff paid in our country. It is win-win situation for both. We will commit certain things, we will give you 0% duty, you give us 0% duty or whatever concession duty. And both governments will agree, they will sign that. EU, now this is a major development that we signed FTA with EU, that is good because it is a consolidation group of 27 countries. So some exports we can slowly exporters can plan there. But you may be knowing the negotiations with EU FTA was going on for how many years? Approx?
18 years. 18 years.
Yeah, right, 20 years. So after 20 years that got signed. Major, so this is the pace at which we work in the foreign trade market, international.
Not we European work like that.
No, but we would have tried. Look, now also we tried. It took a lot of efforts. Whatever said and done, it took a lot of efforts, lot of visits and all discussions. Major ongoing negotiations include deals that we know on this going on. This is import of goods and export of goods. There are 3 categories. One is the free. See, export is free. Free means not free of cost. Freely exportable. No restrictions. Another is restricted and then prohibited. And certain imports are through ST. Now restricted means you are allowed to import, but with the license from the DGFT. That is called authorization from DGFT, like advance authorization, EPCG, etc. And prohibited means you are not allowed to import. You cannot either export or. So examples are given. Prohibited cannot be imported or exported. That is work of ivory and articles of ivory. That's one example again. There is a lot of list. Restricted, you can bring this, but with authorization, with permission, with license. Then certain goods are reserved only for state trading. Means it has to be imported through state trading enterprises. So that is ONGC, FCA, etc. Gas oil and free. Others you can any product you can make import or export free. Now, as I told you, the Trade Connect portal, that is a separate portal where 12 pillars. I think this PhD has copied from our madam, FM madam, in every union budget. She gives this budget is having 6 goals, this budget is having 10 goals. Like so, he also made 12 pillars in this to increase the exports. So these are the 12 pillars. Source from India, verified global. So on this, I am going to run one small video. So I will also get a little break. So all these 12 pillars. for the Indian exporters. Anybody can go, any exporter who is IC holder can log into this portal and use this facility. The only thing, first is source from India, which will get all the information. But that requires at least $100,000 export in any of the previous year. So time was short. If anybody wants to interact with me, there is not much to interact and go.
A very good evening, everyone. Today we discuss a paradigm shift in EXIM advisory, the DGFT's new digital ecosystem, Trade Connect. As chartered accountants, we are the strategic advisors to India's MSME sector, a sector that currently drives 34% of our nation's total exports. If we are to achieve the macroeconomic vision of $1 trillion in merchandise exports and another $1 trillion in services by 2030, our clients need to transition to streamlined, data-driven operations. Trade Connect is the catalyst. It creates an unprecedented unified grid, interconnecting IEC holders with global Indian mission officials, EPC experts, EXIM Bank, and statutory agencies. Let us delve into the 12 critical pillars of this platform. 1. Source from India, the global digital storefront. An authenticated micro-page where exporters showcase product lines, certifications and capacities directly to global procurement heads. 2. Verified global buyers directory. Exporters can filter buyers by jurisdiction and HS codes bypassing traditional intermediaries for direct margin improvement. 3. Advanced market intelligence dashboard, essential for due diligence. Select a product and jurisdiction and the system generates real-time data on demand, pricing benchmarks, regulations and competitive landscapes. 4. Tariff optimization and FTA Explorer. India has executed free trade agreements with over 15 nations, yet utilization remains staggeringly low due to complex rules of origin. As tax professionals, we add immense value here by calculating exact duty savings, giving clients a definitive pricing edge. 5. Digital Certificate of Origin (ECOO) resolves massive administrative bottlenecks with fully electronic same-day issuance across a secure single interface. 6. EXIM Pathshala, a comprehensive learning system ranging from basic IEC registration to complex documentation. It is an excellent resource for upskilling our clients' internal teams. 7. Trade Events Calendar and Financial Assistance aggregates global trade fairs and integrates direct access to government subsidies. By leveraging grants under schemes like the Market Access Initiative directly through the platform, we can significantly optimize our clients' promotional budgets, protecting their cash flow. 8. Cross-Border E-Commerce Guide, a blueprint providing exact statutory requirements and SOPs for platforms like Amazon Global or Alibaba, allowing businesses to test foreign markets with minimal capital outlay. 9. Real-time Trade Statistics Dashboard visualizes macro trade statistics, which HS codes are experiencing a surge, which jurisdictions are ramping up imports. This transforms our advisory from speculative to highly empirical. 10. Integrated Lab Testing Services integrates certified labs to trigger online testing and receive authenticated reports, entirely mitigating the financial risk of shipment rejections at foreign ports. 11. Market Access Requirements Checker decodes the specific compliance matrix required for any product to clear customs in target markets. No regulatory surprises, no detained shipments. 12. Direct integration with the government ecosystem, a powerful grievance redressal grid. Exporters can interface directly with Indian embassies and regional authorities globally. If a client faces a localized issue in Germany, our embassy in Berlin can be engaged directly through the portal to facilitate biomediation. This level of diplomatic support is unprecedented. To sum up, version 1.0 is robust, but version 2.0 will bring export credit facilitation, ECGC integration, logistics tracking, and AI predictive modeling. Colleagues, the digital infrastructure is here. It is our professional duty to integrate Trade Connect into our advisory practices, providing the operational engine our clients need to scale globally. Over to Mr. JV now.
Thank you. Now, this is a video or self-explanatory. Very good initiative by government, because what I will say, what earlier it was happening, now see, this initiative, Trade Connect portal, earlier what used to happen, if government says, export karo, bahut acha profit hai. Everybody wants to export, everybody wish to export. Somebody says, export, but it's not easy, because you need market knowledge, the buyer's knowledge, who needs what you need. Like for example, you may be knowing New Zealand is a country of population of only 48 to 50 lakhs. So you cannot target New Zealand as a market for all commodities, no machinery, this, nobody will buy them. So now this platform gives you everything. The government is trying to give you everything. You can log in, see the HS code, which products are sold there, what is competition. So all this you will see in the 12 pillar. Only thing, he should be IC holder, and as I said, source from India futures, he should have at least $100,000 turnover. Now this is new export promotion vision which I was talking about. Here chartered accountants have very good scope in future. This is recent, 20th February 26. Today we are in 28. Last week only this trade circular is issued by DGFT, on which now stakeholders responses feedback is asked for, which we can also provide the feedback if we are in that field. Now see, what is this vision? There are two schemes which are coming, because government wants to promote export. That's why they are giving district as a hub and all those facilities. But practically, exports are not increasing. Practically, it is at the same level. So how we will achieve that $2 trillion? Just not by giving lectures and all bhashans. We have to actually work on that. So now, these two schemes, basically what you need finance. All MSMEs, whatever said and done, you told MSME is the growth of engine, MSME will do the export. How they will do the export? Unless they get an easy finance. So here, they have made now 25,000 crores outlay for 6 years, and this Niryat Protsahan scheme, it is for MSMEs basically and e-commerce exporters. And another is, these are the key features. Export factoring will be there. Eligible IC holders will get interest subvention of 2.75%. Then export receivables also can be converted, and annual cap, but it's 50 lakhs per exporter. Credit assistance for e-commerce exporters will be given. So details are available on DGFT side of this. I'm not going in much detail in this. Niryat Disha scheme is coming. That is for reimbursement of expenses. No? If certain countries need inspection, like if you know Kenya certificate of conformity is compulsory. Without certificate of conformity IDF, you cannot export to Kenya. So that certification cost comes on the Indian exporter. So such cost can be reimbursed wherever certifications etc. Then the 25 lakhs per IC holder expenses can be covered toward this. If he is visiting, making any expenses to it. There are criteria that we have to see detailed in the. Okay. Next. Chartered accountants क्या कर सकते हैं? ये सब कर सकते हैं. Because we are doing everything. Our clients are exporters, importers, so we can do the documentation, claim filing, compliances which is required for that, strategy advisory, training capacity building. Now these are the schemes, export promotion schemes which we are aware of. I'll just rush through this. Only one thing I would like to interact here. RODTAP. RODTAP is remission of duties and taxes on exported products. So what is the scheme? What is remitted back to the exporter? And why this scheme is slowly going to be closed? So anyone? What is RODTAP? Why government is what? RODTAP means what? What taxes you are getting refund? You are getting IGST as a refund. So zero rated tax. So what is this extra? This extra is there are some taxes which are still going in your export. You cannot export taxes, no? That is the rule. So you cannot export taxes, but still there are taxes like transportation. Transportation diesel. Diesel is not in GST. So on diesel you are paying central excise and VAT still. So that tax is going, no? Right? Somebody is going to bid that. Electricity. There is no GST, but electricity duty is there, no? Which is collected by the state government or whichever electricity government, basically. So these taxes are embedded in our cost. So these taxes will be refunded by way of RODTAP. Now RODTAP earlier the scheme name was Focus Market Scheme, Focus Product Scheme. That name we changed to MEIS, ACIs for service. Then MEIS is changed to RODTAP. So why this name change? ऐसे नाम चेंज कर रहे हैं, खुशी ऐसे नहीं, उसके पीछे कुछ राज है. Anyone? अच्छा है, कोई प्रैक्टिस नहीं करते. चलो good. I'll give you the only if you have time, just give you the background. Indian government as well as Indian people are very clever. उनको जुगाड़ सब जगह आता है, बहुत अच्छा जुगाड़. We are very famous for that. So what happened here? There is a rule. MEIS means the incentive. That's why it is called incentive to remission. That is the concept. Incentive to remission means government says incentive to remission. So incentive means earlier exports were incentivized. You are getting MEIS of 5%, MEIS of 4%, depending on the country, depending on the product. So if I am paying 5% incentive, means if I do a FOB value of 100 crores, I will get 5 crores as MEIS script, which I can either sell or I can debit my customer. Now, there is a rule in WTO. We are a member of WTO, you are a founder member of 166 member country. So there is a rule. If your per capita income is $1,000 in last 3 years, then you cannot incentivize your export. Otherwise, your complaint will go to WTO. So immediately, in 1 year, we cross that $1,000 per capita. So US went to WTO and US complained, these people are incentivized export. Not at all. So government cleverly said, okay, what is the change the scheme, brought tax. This is not incentive now. These are the taxes embedded in our product which you are giving back. So this is not incentive. But the only one thing they did wrong according to me. They have made the same scheme, percentage they have reduced, but on the FOB value. So who will believe? So if the taxes you are collecting, there should be some other rationale, no? Again you keep the same percentage of FOB value. How your the duty remains same. So again they objected. Now ROTTAP also they are objecting. No, they have just changed the name. India had changed the name. Okay. That's why you will find 2 days before only there is a circular. They are reducing ROTTAP to 50%. Existing level of ROTTAP has come to 0.81% like that. So again it will become 0.40 or 0.50%. It is peanuts. So that this scheme, I think, according to me, it will go, and that's why they are coming with this export mission. EPCG, we are aware. So, should I skip this EPCG? Everybody is aware, or you want me to put the point? EPCG, you are aware. EPCG is a scheme where you import machine, don't pay custom duty, 6 times export obligation. Next 6 years you have to do 6 times export obligation, then duty is exempt. But suppose you don't do that, then you have to pay the custom duty along with the interest. Now here, whether custom duty and IGST is also allowed? Yes, it is allowed. You can import IGST on import plus custom duty into 6 times, or alternatively, you can take only custom duty into 6 times and pay IGST. Choice is with exporter. Importer. But here condition is importer has to export within next 6 years with the help of that machine. Machine should produce the exported goods. This he has to specify. It's not like that. I bring a machine which is say manufactured in these PET bottles, and I produce something else. So I have to say this machine is for producing PET bottles. These are the products which I will do. One of my clients, what happened, he imported machine from China, and he has given the list. The chartered engineer has to certify this list. So he has given the list, these 2 products, and this he has to mention the EPCG license, etc., and the shipping bills when it is exported. And then he made lots of export from this machine, about 10 products. Then they objected. Then explanation is given, chartered engineer is a related product, this and that, all these things. So the professional chartered engineers also give the certificate, and then the
Okay, so a direct export or third party export is also permissible.
Yeah, supporting manufacturer. But your name should be mentioned, shipping. See, suppose I am a merchant
Manufactured by us.
Correct. I am a merchant exporter. Here, see, why this is a good field. What happens? Sometimes there is a manufacturer who is having good products, who wants to export also, but who is not having funds, financing issue. Now there is another person who is not having any factory, but he is having funds, lot of funds. So type, as a chartered accountant, you type. You become merchant exporter. You bring the machine, invest, take the advantage of EPCG license. Supporting manufacturer का नाम ऐड कर दो manufacturer, and while exporting, write both. You get that. Okay. So pay, first option is pay the duty. So if you pay duty, nothing, no EPCG is required. Second, as I said, 3 crores. हाँ, उसमें भी obligation में से first 4 years you have to do 50% obligation. Next 2 years 50%. ये सब आपका obligation समझो 3 करोड़ का duty है, तो 18 करोड़ is your obligation in next 6 years. 18 करोड़ में से 9 करोड़ पहले 4 years में करो, 9 करोड़ remaining 4 years. अगर first block में 50% नहीं हुआ, then you have to take the extension by paying composition fee. Okay, and अगर 6 years में नहीं हुआ, then again you can get 2 years extension, but again paying by composition fees, you can get another 2 years extension. That is called block extension. In GM jewelries को थोड़ा कम दिए हैं export obligation. Another one thing is average export obligation is also there. Average means I am already in export. I am doing say 1 crore export every year, and I take the EPCG license. Then that 1 crore I have to do plus new obligation. This average obligation has to be completed plus the new obligation. So this I will skip. These are so ROTTAP ROC is only for textile and all that steel. This green technology products, they have given 75% export obligation. So here for these green products, because government wants to promote the export of these products, so 75 instead of 100%, you do 70. Another one scheme, that is pay early, like advance, you pay in advance, you will get concession. So if you complete your export obligation in 3 years instead of 6 years, 75%, at least 75% if you complete, then 25% is waived. No need to complete the obligation. But within 3 years, before 3 years, you do. This is faster processing time and tap I already invested. This I am skipping, this is not that important. Status holder. Status holder certification is 1 star, 2 star export house, 3 star export house, depending on your turnover. Export earning. So this that is also changed now. The criteria, it is reduced. Threshold is reduced now. It is $1 million. So 1 star export house is 3 million, 15, 50, 200, 800. This earlier it was 100, 500, 3,000. So now they have reduced. So if somebody is having the export performance of $800 million, he will become 5 star export house. And 1 star export house, same 3 million. So these are the. This export performance should be in previous 3 years and current year. Suppose you are applying now, this year plus 3 years. The total performance should be, if it is 3 million, then you will get the 1 star export house. Now double weightage is given only for 1 star export house for MSMEs and all. So you will get double weightage. So MSME को जल्दी 1 star export house मिल सकता है because you need, now as a chartered accountant you can see the exporters because nobody goes for that. Exporter को भी पता नहीं होता. इसके advantages. So you see if it is $1.5 million cross in last 3 plus this year, and if it is MSME, get the certificate 1 star export house for it because he will get benefit in the bank and all those things. Privileges उनको है जो 2 star export house के above है, 1 star वाले को नहीं मिलता, but warehouse facility, warehouse license मिलता है. Input output norms on private. Input output norms, anybody is aware? Sion norms. Anybody has heard of Sion norms? Not good also. Sometimes I feel good because I am saved. Okay. Input out standard input output norms means government has put that, suppose we want to export a shirt, then what is required for this shirt? How many meters of cloth is required? So all these standard input output norms are given for each product. So when you import, you have to give that. Okay, I am importing this, that is basically applicable from A, that is advance authorization. When you take the advance authorization license and make that export obligation with the 15% value addition, then you get that. So in that you have to take the standard norms. If anything is not there, suppose standard norms are not prescribed for any finished product, then you have to fix your own norms, and that norms will be priority fixed by the norms committee of DA. So these are the benefits, etc. I am skipping this because this wherever important I feel from chartered accountant point of view, you will see. Skilling, this is good. This we can try. I think at ICAI level also we should try this. Why I tell you? Now skilling and mentorship obligation. Now we have about 6 lakh IC holders as I told you. Out of 6 lakhs, assume about 4 to 5 lakhs IC holders will be exporters. Now these exporters, out of that let's say 50,000 maybe 2 star export houses. This is only for 2 star export houses. Okay. Now this is my compulsory. Now, if you 2 star export house, 5 trainings per year, 10 trainings per year, 20 trainings, they have to train the new entrepreneurs or new exporters. They have to train. Train means the statutory module is to be. Now so far, government has left it to the export houses. You prepare your module, you train the people, but this has to be done. Now what will happen? They will certify, something will be done and it will be reported to government. इतने 10 आदमी को train किया, CP sheet भर गए, जैसे भर के हो गए. So like that it will happen. Here, this government will incentivize. If we make the module of 6 course, if you make the module, tell the export houses, all these export houses, which may be our clients also at ICAI level, we will give you this online courses, etc., etc. You don't worry. So those participants, the export houses will be happy because they need not break their heads. No? They are concerned with their business, not with these compliances. So they will say, okay, you handle, you take this fee, you conduct this for new exporters, whatever. So this is one of the area where, as a CA, we can each one teach one is the principle. AEO, you will be aware, Authorized Economic Operator Program by Indian Customs. Means you get a preferential treatment at discharge port, etc. If you get that. This is also like status order, but this is given on the basis of your factory premises, your documentation, everything. AEO T1, T2, T3. T1 is for your documentation, how your office is, whether you are keeping your proper account. So you have to give balance sheet, this, that. They give you. T2, T3 with the actual physical variation to factory. But if you get that, there are various advantages. There is Indian customers signed MRA with these countries. So then whenever your consignment goes to that port, it will be cleared fast. MSCPs also are included. So this is the AEO program. These are the benefits. E-commerce, as I told you, e-commerce may export hubs. Now you may be aware DGFT has signed the agreement with Amazon because they have the biggest digital platform. So e-commerce, they are now trying to promote that. Developing district as export hubs. Each district as export hub, considering in that district what is export potential. The government is making the committee, that is district level committee, the state level committee, and then they will analyze where the need of for that export product and they will support. So all this with the coordination with the state government. Now about 765 something district committees are already formed and now they are working on it. But it is going a little slow. It is to be expedited to get it actual output of this. Then e-commerce, which we are aware of, the target is about 200 billion. Total world e-commerce is 8 trillion. Now here, what government is saying, we are not exploring this part. See, non-resident Indians, our Indians staying in other countries is about 30 million across. Where bigger maybe here or there, is about 3 crores. So even if we sell through e-commerce, export to our own relatives or own friends, etc., then also we can achieve this target. District and export hubs that we discussed, institutional market access, all these things will be given to them. Town of export excellence, now 4 towns are added, 39 towns are already there. Here criteria is at least 750 crores goods should be produced from that town and it should have export potential. Now new 4 towns are added, you may be aware. Faridabad for apparel, Mirzapur for handmade carpet, Muradabad for handicraft, Varanasi for handloom and handicraft. Because our major exports is of, you may be aware, that is engineering goods, petroleum products, that those commodities, machineries. Then comment policy is silent here. What is comment? You may be aware. Dual use. Let's say urea. Urea can be used for as a fertilizer in agriculture also, as well as urea can be used as a destructive in the weapons. So dual use items should be controlled. So that's why if the common use items is there, that is chemicals, organism, materials, equipment, technology, then it will be controlled. It will be given authorization only if the proper declarations are given and everything will rules will be controlled. That is called comment list. The comment list is given there in the 0 to 8 ports, nuclear, nuclear and nuclear parts. Coming to the end now, the important professional opportunities. That is NCLT proceedings. Suppose NCLT proceedings are happening and the export obligation is not met yet. Then there is certification. Wherever certification required, then we have spoken. So here you have to give that consumption and etc. according to it. So this is to be certified by chartered engineer and chartered accountant, documentary evidence of your fulfillment, etc. Then when you get any license, any status holder, advance operation or DFII or APCG license, whatever. So any license, any authorization if you get, you have to maintain. Condition is always there. If you get them, then you have to maintain books of accounts. So when the maintain books of accounts are there, so we should be there. So maintain means हमको audit करना है, ये करना है, वो सब proper attested करके देना है, होनी चाहिए advance authorization. So this is one opportunities. These are the opportunities. Then duty free imports. This is for R&D equipments all. They can make bring the duty free imports up to 25% of approved value for pharmaceuticals and agrochemicals. 1% of अभी ये सब क्लाइंट कैसे मिलेंगे? तो ऑलरेडी अगर हमारे क्लाइंट्स है एक्सपोर्ट इंपोर्ट, नॉट इंपोर्टर बेसिकली एक्सपोर्टर, देन यू कैन यूज दैट टाई अप विद एक्जिम कंसल्टेंट, स्ट्रेट फॉरवर्डर्स, उनके पास होते हैं बिकॉज दे हैंडल दैट, कोलैबोरेट लॉजिस्टिक कंपनीज. Now the only last slide I'll do that is notifications. Why I have included 3-4, there are a lot of notifications. These are I have included. See, this is 27 June 25, HS code 53, the notification like this, import restricted from India, Bangladesh land border. That you cannot import this product from the land border, but allowed through only one port. This is, you have to be careful because this notification says you have to bring it for to Navasheva port. So if you bring it to Kolkata port or Chennai port, then it is not, then it will be wrong. So that's next is this 21 notification is again amended, where they have included another HS code, that is 56 and 63 also added. Then comment list, as I told you, dual use, that is revised on 23rd September. Now this is then Ministry of New and Renewable Energy. This is what happens. Like there are other ministries also connected. Sometimes people are not aware. People with CHs are all they are aware, but sometimes importers are not aware. Like since when you import steel, it goes to the steel ministry, and that is monitored. How much steel, what quantity you are bringing. So there is a registration. That is SIMS. You have to get the SIMS registration. You have to go in that to that site, steel ministry site. It is integrated, and then you have to take that number, registration number, and put it in your bill of entry. Suppose you don't do that, you cannot do anything. Before 7 days, it has to come. Now, if your cargo arrives here and you are not done that, what you will have? BO is fine. So, Bhagwan kaun hai? Custom officer. Only he can save you. Otherwise, your cargo will be blocked. Then prior registration, etc. Only thing for since they have removed the air shipment, only sea shipments are there. And last notification, I just told you, road tap is reduced. This is hardly 23rd February. See how sometimes government operates. On 23rd February, is 3-4 days back, they have put a notification, road tap rates will be reduced to 50%, restricted to 50%. Whatever rate, suppose now 7 point, that textile etc. was having good rate, something 7.5 was the road tap rate. Now 50% means 3.70. Like so 1% will become 0.5%. Immediately on next day they realize chapter 1 to 24 are all vegetables, fruit, this is agriculture बोला तो डर जाते हैं ना कोई भी गवर्नमेंट वाले एग्रीकल्चर को आते हैं तो नेक्स्ट डे इमीडिएटली कॉरिजन आ गया कि 1 to 24 कोई एप्लीकेबल अदर देन दीज चैप्टर्स. So whatever with my little knowledge, with my little experience, thanks for having patient hearing and bearing with me for not such wonderful topic, but whatever knowledge I have, I try to share. Thank you.
Thank you. Thank you very much, sir, for this wonderful presentation. Now I request Deputy Convener Pratik Maru to propose to well-deserved vote of thanks.
Thank you very much, Nigade sir, for accepting our request and delivering the talk on today's topic. Thank you, sir, for sparing out time and enriching the knowledge of our members. I, on behalf of BCSE, would request all members to join and have a good round of applause. Thank you very much, sir.